You know, if the buildings in a city could actually talk, what kind of story would they tell us about its economy? Well, in Cincinnati, they're telling a story of a major split, a really fascinating tale of two completely different markets happening right next to each other. On one side, you have the quiet halls of office buildings, which are trying to figure out this whole new world of work. And on the other, you've got the constant buzz of industrial warehouses just humming along. So today, we're going to dive into the data from JLL, Cushman & Wakefield, and Colliers to really unpack these two very different stories. But before we get into the nitty-gritty of real estate, let's zoom out for a second and just get a quick snapshot of the city's overall economic health as of the third quarter of 2025. Okay, so the city's unemployment rate came in at 4.7%. To give you some context, that's just a little bit higher than the national average, which was sitting at 4.3% at the time.
And just to give you a sense of the scale we're talking about, the Cincinnati area has about 1.2 million people employed. That's a pretty significant workforce, and it's really at the heart of these big shifts we're about to see in the real estate market.
And if we zoom out even further to the state level, Ohio is doing pretty well. A recent ranking from CNBC put it as the fifth best state for business in the entire country. And this is really key, because having a business-friendly environment, with good infrastructure and decent costs, that really sets the stage for the industrial boom we're going to get into.
All right, let's jump into our first story. And it's one that's making headlines pretty much everywhere. What in the world is going on with the office market?
With remote and hybrid work basically becoming the new normal, the big question on everyone's mind is, what's actually happening inside all those downtown towers and suburban office parks? Well, the headline number from Cushman & Wakefield's research is pretty stark. 25.3%. Think about that for a second. That means 1 out of every 4 square feet of office space they track in the whole greater Cincinnati area is just sitting empty right now.
Now, you might see a couple of different numbers out there depending on where you look. Colliers, for example, reports a lower rate, 15.8%. This isn't really a contradiction, it's just that these firms track slightly different groups of buildings. The main takeaway, though, is the same no matter how you slice it. There is a lot of vacant office space out there.
Now, to understand the flow of things, we look at something called net absorption. It's a fancy term, but it's simple. It's just the total space leased minus the space that got emptied out. And here, the signals are kind of mixed. In the third quarter alone, the market actually lost 114,000 square feet. But if you look at the whole year so far, it's actually in positive territory by over 200,000. So it's a complicated picture, right? Short-term losses against some mild annual gain.
But hey, this does not mean the market is dead. Not at all. We're actually seeing this really powerful trend called the flight to quality. Basically, companies are ditching their older, kind of dated offices for new spaces that will actually make employees want to come back. We're talking better tech, cool layouts, awesome amenities. So demand isn't just shrinking, it's getting pickier. It's evolving.
Okay, now let's completely switch gears and talk about our second story, which honestly could not be more different. We're talking about those massive warehouses and logistics centers that have become the new engine of our economy. And wow, this slide right here perfectly illustrates the contrast. Just look at that. While a quarter of the office space is empty, the vacancy rate for industrial space is just 6.9%. That is a massive, massive difference.
Let's just put that 6.9% in perspective for a second. That means the industrial market is incredibly tight. For businesses, finding available space is a real challenge, which is the complete opposite of what's happening in the office sector.
So what's fueling this fire? Well, it's really a perfect storm of factors. You've got the never-ending growth of e-commerce, which is driving this huge demand for logistics hubs and those last-mile distribution centers. Plus, companies are totally focused on automating their operations and building tougher supply chains. And for that, you need modern, super efficient buildings.
And if you look at the market fundamentals, you could see the incredible momentum. Net absorption, up for the year. The amount of new space being built, rising. Total vacancy, it's falling. And all this demand is keeping the average rent stable and strong. I mean, it is all systems go.
So this all brings us to the big question, why? Why are two parts of the commercial real estate world in the exact same city heading in completely opposite directions? This slide really just lays it all out. The office market, with its high vacancy and negative absorption, is struggling with this fundamental shift in how and where we all work. Meanwhile, the industrial market, with its super low vacancy and positive absorption, is just being rocketed forward by the massive shifts in how we all shop and how all that stuff gets to our front door.
So, where do we go from here?
Let's wrap things up by looking ahead at what the experts are predicting for these two very different markets as we head into 2026.
For the office market, believe it or not, there are actually signs of optimism. Colliers points out that both the number of deals and the size of the leases being signed are starting to tick up. They see this as a market that's finally stabilizing and maybe, just maybe, getting ready for a rebound.
The outlook for the industrial market, on the other hand, is one of continued but much more sophisticated demand. According to JLL, the future isn't just about needing more space, it's about needing smarter space. Buildings that offer flexibility, efficiency, and costs you can actually predict.
You know, this whole tale of two markets in Cincinnati is really just a smaller version of a trend that's playing out all across the country. And it leaves us with this really fascinating question. As our economy keeps changing, will the future of our cities be defined more by the bustling warehouse or by the collaborative workspace?